Hey guys, Michael here with Daryl French, the mortgage broker that's going to give us all the answers and the facts on what's going on with the interest rates and the bonds.
So it's been a really active week in the bond market, and the reason we care about the bonds is that's what mortgage rates follow. If you follow the bond yields, the Bank of Canada bond yields, you'll see what's going on with the mortgages. Last Friday, we ended last week at 2.97%, right in that ballpark, just under 3%. This week we've been hovering around that 3.3%. We popped up even as high as 3.4%. So what that means, usually when the bond yields go up, mortgage rates go up, and we've seen that a number of lenders already this week have raised the mortgage rates, and I don't think that's something that's going to disappear. At the same time, we're also hearing a lot of chatter. You hear Tiff McCallum, head of Bank of Canada, they're coming out talking a lot about the likelihood of an increase in the bank rate versus a decrease in the bank rate. Right now, the most likely scenario, and this is just a whole bunch of economists guessing what's going to happen in the future, but the most likely scenario is about a 0.25% increase somewhere around the September Bank of Canada meeting. Okay, so it's likely to kind of stay flat, hopefully, unless some data comes in or something changes, but hopefully kind of stay flat for the summer, and then we are likely to see another 0.25% increase in September. That being said, the data that goes forward, how inflation kicks in, all those kinds of things, is really going to impact that. And I think, a lot of us, everybody knows we bumped up this last week by 0.1 instead of declining. But I think we're going to see a bit of a change there because the mortgage rates, the cost of money, has really impacted inflation, right? So as our cost of borrowing goes up, that impacts inflation. And so we're comparing to last year. So we're comparing March of last year, April of last year. And as we go through the year, in 2022, the interest rates were quite a bit higher come May, June, July than they were in January, February, March. So that impact is going to be a little bit less, and we're going to start to see that gap start to come down a little bit, which hopefully will bring down those inflation numbers. So I think the Bank of Canada is doing a little bit of wait and see. They want to see all of these things kind of play out and see how it happens, and wait and see before they jump in again.
Yeah, and the other fact we were talking about is that even though we still have pretty high interest rates, we also have really high prices, which is unusual because usually when we have one or the other, kind of goes hands in hand. So if you have low interest rates, the prices are high. When you have high interest rates, prices go down, which we've seen all the way up till January. We had a big decrease in the average selling price, and it stopped in January to start going the other way. And in fact, in the last months of April, it gone up about 5%, which again is showing us that we will probably gonna see a pretty active market, and that we are not expecting the prices to go down throughout the summer just because of the low inventory and high demand.
Yeah, and that's I just wrote a blog on that this last week, and the inventory, the lack of housing, CMHC is predicting by 2030 we're going to be short about 3.5 million homes. That's a lot. When you think of a population of just over 35 million, about 10% of the population. So that's an enormous number. So it's really hard to see house prices go down, even though the mortgage rates are up.
Yes.
So it's a bit of a different market right now.
Yeah, supply demand. So I think that's definitely what is setting up the prices right now. It's not really as much as the interest rates. I think that the demand and the low supply is what's going to determine where the prices will go. So anything else you wanted to add?
Well, I think the other thing is we keep saying high interest rates.
Yes,
right.
Compared to what it was.
So it's high interest rates compared to all-time lows.
Yes.
Right. So we're now back to kind of longer term. If you look at kind of 20, 30, 40-year averages, we're kind of back into those long-term average rates. So we have to be careful on what we're saying as far as terminology. The rates are higher than they were a year ago, but they're really average rates on long term.
Right. So the average is about 6% for the a longer term, right?
Yeah. No, it's actually below that. We're down in the 5% range now. If you look at the longer term averages, and today, 5-year fixed rates are just below 5%, right? So that's why I say we're at very average rates right now. So everybody's like, oh my gosh, we can't afford these rates. Well, these rates have been around for decades. This isn't something new. It's just the new part was the really low rates that we had for a couple of years.
Yes, and I think that the only only things that is changing is that the price stayed pretty much the same. They didn't come down as much with the increase in the interest rates because
Yes.
of the supply and demand. So now it's a little bit more difficult to
The overall cost.
Yes,
Yeah.
the overall cost.
The
to
overall
afford
cost.
it.
Yeah, affordability is definitely
Yes.
not in our favor right now. But that being said, as you just said, we're still seeing an incredible
Yes.
pressure. We're seeing multiple offers.
Yes.
We're seeing all that pressure on the housing side, which really, in theory, shouldn't be happening with a lot of the affordability going on.
Yes, and what we're seeing is a lot of people that already build up their equity through, you know, owning a house before and selling it and using that equity to buy the next one. So if you don't have that, it's very difficult for people to get into the market, which leads me to maybe at the next point, who do you kind of seeing that is buying now? We're seeing definitely a lot of investors, people that are moving up because they can sell their house for a really good amount if it's, you know, under $1 million here in Kelowna, and then they can buy up in something much nicer and
Yeah.
adding up into it. So we're definitely seeing a lot of move up
We're,
buyers.
we're seeing a lot of move up buyers, but I am still surprised how strong the first time buyer market side is. There's still a lot of first time buyers getting into the market. That being said, a lot of the first time buyers that we see getting into the market, they are definitely getting help from mom and dad. For them to do it on their own is very challenging. We already covered off the affordability side of things. So Bank of Mom and Dad is pretty busy these days and coming to help a lot on that side because it's just very difficult for a 20-something to save up, you know, $25,000 to $50,000 for a down payment in today's market. So it is challenging, but we're also seeing wages go up. Wages are going up faster than inflation, so there is some positive there.
Yes, and what would you say now if you know, if someone's looking into getting into the market? What due diligence? What is the best way to start?
Well, I always say the starting point should be with us, really, and it's not just self-serving. It's just sitting down with a mortgage broker and going through the steps so you understand what your requirements are, what you do actually qualify for. A lot of people are surprised knowing the programs, the first time buyer programs that are available. All of these kinds of things really arm you and help you get into the market. And you don't have to commit to anything. It's just coming in, getting some education, going through the process, starting an application and seeing where you start, where you're at now. And then we can help create a plan for you to get from here to wherever you want to go.
Right, excellent. So what's the best way to reach you if anyone has further questions or want to
give me the best way to get me is give me a call 250-470-8843 or you can email me at Daryl DARYL at lendingmax.ca.
Yeah, we'll put it down below somewhere in the comments as well so you guys can get that, and we'll give you another update in about a month.
Thanks very much.